rahmatullah. Thank you all for joining us on this Sunday evening, afternoon. My name is Aliredha Walji, and alongside myself, we have Rezwana Abed, who will be presenting on the subject of halal investing. We're truly honored and happy to have you all join us for this presentation. I know it's Sunday, people could be watching sports or playing with their families or whatever else, and you chose to spend the time here. So we really appreciate that. And we'll dive right in. This is also recorded, I believe. So if we need to, potentially share that, it should be available, inshallah. So this is a standard disclaimer that we put on all of our presentations, so feel free to review it at your leisure. Main point here is that this is not financial advice. We are intending to cover topics that we feel will be informative for everyone, but to discuss your specific financial goals individually or as a family, you can book an appointment with Rezwana. Her link is going to be provided on the last slide. So you can schedule an appointment directly with her to discuss one-on-one, but this is just meant for educational purposes, inshallah. So a little bit about Sharia portfolio, and I hope this will give you a little bit of background as to where we are coming from and kind of what are we currently doing. So Sharia portfolio's mission is to offer professionally managed investment solutions to help our clients and Muslims across the United States achieve their financial goals while adhering to their personal values. Our company was founded in 2003, so we've been doing this for just over 2 decades now. And we're licensed under the SEC umbrella, so we're federally registered to be able to work with clients in all 50 states. Also, through our affiliated companies, we have SP Funds, SP Canada, and SP Global. So if you ever curious to understand what is Sharia portfolio and what is SP all about, you can visit SP-Wealth, and Rezwana can type that into the chat for everyone to just visit that, sp-wealth.com or .org, I think. And you can get a good overview of all the companies and the breadth of service that Sharia portfolio provides. And our investments are generally structured to follow AOFI guidelines. We will be covering in one of our segments here today what is the halal criteria. So Rezwana will go into that in more detail, but just want to point that out for you as well. So in terms of our agenda, this is what we're intending to go over. We'll cover a few definitions and high-level information about the stock market, provide a little bit of historical context, and then we'll dive into what are some of the investment approaches that are commonly utilized when screening or considering how to structure a portfolio. And then after that, we will talk about the halal investing criteria. What does that mean exactly? And what are the different ways that you can invest if you so choose to embark on this journey? And then at the end, we will attempt to answer any questions that come through. So we're really excited to have this for you guys, and we look forward to your engagement. And inshallah, this will be exciting for all of you as well. Hopefully, if you're a seasoned investor, you'll hopefully still leave with a couple of nuggets. And if you're new to this, we try to make it as easy and digestible as we can. So hopefully it'll be, something that can benefit each and every one of you that is here today. So with regards to the stock market, we're going to talk a little bit about why, right? It's always important to understand why is investing important, because that's what's going to get you in the right framework as to why this is important. And before we do that, I'll cover a few definitions here. When we talk about investing, or when you look at any channel like the CNBC or Bloomberg or any of these, they will have a lot of terminology scrolling and being mentioned. But a few common ones that you want to be aware of that I think is relevant for today's presentation as well is terms like equity. So when you're investing in the stock market and you hold shares in any given company, you're considered to own equity in that company, which means if the company is making a profit, you are eligible to earn either the profits that is shared in the form of dividends or If there is a gain in the price of the stock, then you are able to benefit from that if you have equity ownership in the business. So when you're investing in a stock, you're essentially part owner of that particular business, whether it's Apple or Google or any companies out there. That's what it means to be an equity owner. You have voting rights as well, so you are able to vote for different shareholder proposals that are put together, and so you have a right to voice your opinion and have a say in what the company does or does not do. Sukuk, on the other hand, represents the fixed income component. So I know Muslims, we are not going to benefit, or we're not going to embark in debt-based instruments because of the element of riba, and we do not want to earn interest on our money. So an alternative to that is sukuk. So to take a step back, debt-based instruments that generally make up the component of a balanced portfolio will be stock and bond, as you guys have typically heard, right? So bonds will be an obligation that is on either a company or a government to pay back interest for the money that they borrow. So that's what essentially a bond represents, a debt obligation. On the other hand, if you're investing in a sukuk, this is allowing you to participate in a category that fulfills the risk reward that is intended for a portfolio, but without sacrificing on the principles of Islamic investing. So you're still able to minimize the risk in your portfolio by including sukuk in there, but you're doing this through some kind of profit sharing arrangement, like a lease backed arrangement, and it's asset backed, which is what makes it Sharia compliant. So this is just some common terminology that we just want you to be aware of. Hybrids are generally a combination of stocks, bonds, or REITs. Real estate makes up REITs. Real estate investment trusts, for example, are publicly listed real estate investment vehicles that are available for investors. So hybrids are generally going to try and incorporate different asset classes to balance things out. However, for our case, you might have heard of like target date funds. I'm sure a lot of you in your retirement plans through your employers have equity funds, bond funds, and some target date funds. So the target date funds is a type of hybrid fund. So if you see that being mentioned, you kind of have an idea of what that represents. And there are halal options for all of these three mentioned here. So if you're wondering, there are definitely in today's world, halal opportunities for people to benefit from all of these different asset classes. So when we look at the history of the stock market, you can see that, despite some of the crazy things that we've encountered, Black Monday, tech bubble, global financial crisis, COVID, I'm sure all of you remember just recently, these were all things that created a lot of fear, right? People were worried what is going to happen, and rightfully so, right? There's always something that we want to be mindful of the risks that are out there. But if you were to just focus on that and not realize that these are short-term, temporary, bumps along the road, then you would miss out on the green bars. Everyone can clearly see on this chart that the green bars are higher and longer in magnitude, so you can imagine that if you stayed on the sidelines, you would be missing out on a lot of the big gains that are happening over the years. So almost 2/3 of the market time is spent in a bull market, which is when the market is, the price is increasing by generally over 20%. So this is what we want everyone to keep in mind. And whenever there is fear, that's not a bad thing, because that shows that there is opportunities, right? Fear, as you might have heard terms, right? Buy when there is blood on the street. Some of you might have heard of that. Or running into burning buildings. That's the one I like to go with. So when there's fear, or as Warren Buffett says, right? Be greedy when others are fearful, and be fearful when others are greedy, right? So when there is fear, that's usually when amazing opportunities present themselves. So just keep that in mind as you embark in the journey of investing. What are some other reasons why we might invest? We'll go into some of those, and then I'll talk about a little bit about some of the things that you need to be mindful of when investing as well. So why would we want to invest? One of the most pressing things in today's world that everyone, not just in the US, but globally has been having to contend with is the rising cost of different services and goods, right? So in the US, for example, you can see transportation services have been the highest. We've seen the increase in the shelter home, whether it's renting or buying a home, among other things. Even food prices have gone up considerably. So while the increase percentage-wise might not appear to be that high, the overall expenses that a family has to generally contend with is not keeping up with people's wages, for example, which makes it very difficult for a lot of people to survive in some cases. And so by being mindful of this, I think people need to consider, okay, well, if I have savings, or if or if I'm not investing towards my retirement, I might fall into trouble. So just want to keep this in perspective. And at the same time, we have seen over the last 30 years, for example, a decline in the purchasing power. So if you were in 1990s holding on to cash, right, where you say, look, I'm just going to keep this in the bank, I'm not really interested in investing, you would have lost 54% of your purchasing power in terms of the currency that you're holding. And I'm sure it would be worse in other currencies. But even in the US, right, which has generally held its value better than other currencies, you would have still lost a good chunk of the wealth. On the flip side, if you were to invest in an S&P 500 type index, your average return would be almost 8%, giving you a cumulative return of 923%. So this is another reason why I think it's very important to invest and not find yourself sitting on the sidelines. Today, actually, as of today's information, we're seeing there is over $6.3 trillion on the sidelines. And, this is definitely something we believe that people will slowly put that to work because of, again, the same things that have happened over time. It's going to accelerate because debt and other problems create the inflation and the declining value of our dollars. So something to mention, to keep in mind here. And I throw this here as another visual for us to just keep in mind that, look, in 8 years ago, you would have an average home would cost a family about $288,000. 8 years later, that has gone up to $434,000. So clearly, in dollar terms, the value that you need or the amount that you need to put towards a home has gone up. But if you were to be saving in a different vehicle like Bitcoin, the value has actually gone down. As you can see, you needed 600 Bitcoin, now you need 6 Bitcoin to be able to afford the average home. And I know this is not intended to be a Bitcoin seminar, but I just want to be able to at least give you guys something to think about, that saving and keeping too much cash is not necessarily helping you if you fall into that category. Also, why is the debt a problem? Well, why is it that we are concerned about that? Because if you look at the chart to the right, whether it's the US debt or other currency, other countries like China or even Europe, the same problems exist there, where debt keeps increasing because money printing, is something that governments tend to continue doing to be able to sustain their expenses. Most governments are not generating enough money or revenue from taxes and other sources, so they end up finding themselves overspending, and instead of controlling their expenses in a smart way, like any family would have to do, if you're struggling, you find ways to cut back, right? But that's not the case. Governments generally end up spending too much, and that is what we believe leads to the inflation problem that we are finding ourselves in. On the flip side, something like Bitcoin has a fixed supply, and so that is seen as desirable by those who are trying to hold and preserve the value of their savings. So If you're interested in learning more about this topic, we have done a webinar on Bitcoin specifically in April. You're welcome to check out our YouTube channel, or it may be also on the website available, inshallah. So feel free to follow that. But I just wanted to, again, point as to why investing is important through this visual as well. So, in terms of taking a quick pulse check, I want to see if people are awake. I know it's Sunday. Zoom doesn't allow me to see your faces. So if you guys are awake and alert, I want to see if you guys typing in what are some reasons why you might think investing is important. I want to see at least 3 reasons. So if you're listening and hopefully paying attention, I want to see what are 3 reasons why you think investing is important. Feel free to type that into the chat so I know people are at least listening and I'm not just talking to Rezwana here. Hope they can type. I'm assuming they should have the ability to type, right, Rezwana?
Yeah, I believe so. We can't even hear anyone.
All right, someone has raised their hand. People are raising their hands. Maybe they can't type. That could be. I can let them talk. Yes, Mohammed, if you want to talk, I enabled that option.
Yeah, chat is disabled.
Oh, chat is disabled. I don't know if you have a way to
the Q&A is working. The chat is disabled. But
oh, if Q&A is working, then why don't they put it into the Q&A then?
Yeah, if you don't mind.
Yeah, because I don't know how
it's working.
All right.
Check it out.
All right, so I took that out so that at least you feel free to use the Q&A. Is anything coming in the Q&A, Fatima? Rezwana?
Yeah, so they just let us know, some of the participants, that the chat is disabled, but the Q&A is not.
Maintain value of money. Fantastic. Good. That's what we're saying. You want that the value of your purchasing power, right, maintains. Anyone else wants to type in the Q&A another reason as to why they are investing is important to them, or why they might consider it important to embark in the in the process of investing? Grow our wealth. Fantastic. Nothing wrong with being in a situation where we are wealthier, yes, tomorrow than we were yesterday, because a strong Muslim should be in all aspects, right, to conform with the hadith, right? A weak Muslim, a strong Muslim should be someone who is aspiring to be strong spiritually, physically, financially, in all aspects in our wealth. And inshallah, Allah bless us to be among those who are able to use it in the right channels as well. So yes, absolutely, growing our wealth. One more I need before I dive into some of the reasons that I already gave you guys a clue. Couple of time I put the let's make our wallets gain some weight. Inshallah. I like this crowd. They're a little bit jolly today. So absolutely. So these are some reasons here, right? You want to be able to, inshallah, build wealth, afford to live in a comfortable home, right? Not everyone needs a swimming pool and a big mansion like the one here, but definitely, able to sustain something for yourself and your family. Brother Abdul Rahman shared his car here with us, so I appreciate him giving us a glimpse of what saving for wealth can allow you to do. And by the way, that's a depreciating asset. So in case you're thinking of sports cars, they lose their value very quickly. Retirement is another reason, right? We all hopefully want to be at a point in our stage in our lives where if we work, it's because we want to, but not because we have to. So if you plan early for retirement, inshallah, you can get there. A lot of people thinking Social Security is going to be around, so we don't have to worry. But the U.S. debt has $35.2 trillion currently in the U.S. debt. The Social Security, Medicare is under the category of unfunded liabilities, which is $200+ trillion. So I really don't think that those welfare social type programs are going to be here long enough for a lot of us who are younger, especially. So I would not count on that, which is why you have to prepare for your retirement. You might want to save for Hajj, charity, save on taxes, education. These are some of the other reasons as well. But let me start with what is investing And I'll talk about that actually when I come to what are the types of investing. So in section 2, I'll go over what is investing. But here's another interesting chart that I think you might find helpful to take into consideration. This was a recent survey that was conducted, and Fidelity Investments actually came up with one of the pointers was that, look, investors or anyone trying to save for retirement, you need to have at least 10 times your annual salary by age 67. So if your salary is $200,000, you need to aim for 10 times that, which is 2 million, by the time you hit 67. And if you're young, they're saying, look, by as early as the age of 25, in the past, they used to say 5% or maybe 10% of your savings needs to be tucked away for retirement. Now the recommendation is 15%. So, I'm hoping that, we're all among those who have already at least begun our journey. But if you haven't, try and take note that this is what the experts are recommending. And it's not because, you're going to have much in terms of debts when you're retired. Most people, inshallah, when they're retired, our parents or grandparents have already paid off their homes. They don't have a mortgage anymore. They've paid off their cars. They have also perhaps, they don't have any student loans that they had taken out. They paid all of that away. And they only are, looking to survive and thrive for the period that Allah has blessed them with during retirement. And so according to this, you need that much because that is the true cost, right? Healthcare costs, among other things, are still elevated. So that's why it's very important to start saving early. Also, education, right? We talked about, today's day and age. I just came across this from CNBC. They were estimating 100,000 a year just for college expense. And if you go with a more different survey by the College Board, they say, look, you can expect to pay about 172,000 for 4 years of college. And of course, if that is a state or regular university, but if you're looking at a private or out of state, that can be even higher. A lot of our parents, were among those who may have had to take student loans. So, that's a big problem for Americans right now, where the student loan debt alone is 1.75 trillion. And so if you want to be prepared and you have young children, I mean, I have 6 children, so you can imagine if I'm not if I don't prepare now, I'm going to be in trouble. And just doing something, even if it's small, but consistently over time, and take advantage of time. Time is the key aspect that is your friend, that can help you compound, inshallah, and help you grow that wallet. Whoever's interested in growing their wallet also, take advantage of that time. Charitable giving, Muslims, mashallah, according to research by Pew, they have done this in 2021. They stated that Muslims gave estimated, this is referring to American Muslims in general, gave $4.3 billion in aid. And so, mashallah, through the institution of zakat and, giving in general, whether it's to Muslim-related causes or even non-Muslim-related causes, Muslims are considered to be among the highest and the most philanthropic in giving towards different causes. And so, there is, to be able to save for charity is another important aspect, and we'll go into something that allows you to do that, right? So for some investors, it may make sense to consider vehicles like a donor advised fund. DAF is the acronym for that. And so you can look at that as a vehicle that allows you to put money in either cash or appreciated stock to be able to give yourself the tax break. So if you put in $20,000 in a charitable account, you are able to deduct that, as an expense from your income. At the same time, if that $20,000 was to grow and reach 30,000, for example, you now have additional money that grew tax-free that you can now use towards any of your nonprofit causes that are, that you want to donate towards. And then the funds can be donated at any time in the future. You don't have a specific time frame. If I deposit money in 2024, that doesn't mean I have to donate in 2024. I can donate in 2027 if I choose to keep it in the account and invest it and grow it and then donate later. You have the flexibility to do that. So, this is a vehicle. There's a lot more that can be said on this topic, but we just want people to be aware that this is available. And as I mentioned earlier, you can donate not just cash, but stock as well. So if you are someone who works at a company that is giving you stock options, sometimes you may have the ability to, instead of selling all the stock at once and having to pay capital gains on that, you may be eligible to donate some of that, or even from a regular brokerage account if you have invested and have had huge gains in particular stocks. If you sell, you are going to incur that capital gain. So sometimes donating a portion of that could help you in minimizing your tax as well. So something worth keeping in mind. And of course, when you're investing, there are other ways that you can invest. You don't just need to be considering, just like your income, you can think of supplementing that through other sources, maybe starting a business, or having something that you're passionate about that you can earn a little bit more, or picking up things like art and other aspects that hold value over time. So of course, investing encompasses many different aspects. We just wanted to highlight some of the other things that people can consider. But so far, I just wanted to cover the why it's important and what are some reasons that people should be thinking about when it comes to investing. And now we're going to dive into what are some aspects that you can evaluate, how to evaluate investment opportunities, what are the different philosophies out there, and inshallah, this can give you a little bit insight into how we view some of that. So in the realm of investing, generally there are two main categories. There are those who are focused on passive approaches, and there are those who consider active investing. So what is passive investing all about? You're basically looking to invest by holding a basket of funds. So if you have a fund, whether it's a mutual fund or an ETF, which stands for exchange traded fund, you're basically owning a basket of stock. And so that's what comprises the whole ethos of this passive investing. That's what you're focusing on, is just buying the index funds, for example. You're able to minimize the risk by doing it this way, because let's say 10 stocks out of a basket of 200 stocks did not do so well. Well, your risk was limited because you did not, you owned the whole basket rather than just one or two stocks, right, in your portfolio. So you want to look at it as a form of kind of minimizing your risk. The idea here is you buy and hold, right? And this is generally something that works for those who are looking to maybe start out with a small amount. They've not really built up their savings. So I think this is a fantastic way to invest if you're just getting started. And also, if you're not really knowledgeable about picking which companies to invest in, you just want to take a more buy and hold, you're busy with your life, you don't really want to tinker around with identifying different opportunities, you'd rather just buy the whole basket. This works for those who are in that category. On the other hand, active investing focuses on specific stocks, specific opportunities. So there is opportunity to personalize the portfolio. This is not a cookie cutter, one size fits all type approach. So in the case of passive investing, if you were to use this fruit platter analogy, right, which we like to sometimes go with, if you're going to Costco and you're trying to buy, some fruits for your family, apples, oranges, bananas, or grapes, you can either buy them individually, and that can be as though you're buying individual stock. However, if you're looking to buy the fruit platter, right, so that option is there. If you go to the fridge, I'm sure you'll see cantaloupe and some other things put together. Well, that's basically what a fund represents. You cannot customize that. So if you buy the fund, or Rezwana buys the fund, or I buy the fund, we're basically getting the same thing. You cannot say, look, I already have grapes, can you take out the grapes and put something else instead? No, they're not going to do that. And so you're basically buying a prepackaged product when it comes to funds. But when it comes to the active management, there is personalization. So you can be more selective as to what you want to be invested in. There is tax loss harvesting. So if there is stocks that did not do well in any particular year, you could use the opportunity to sell them at a loss to to offset any of the other stocks that did really well for you. So it does help you to be more efficient from the tax point of view. And the focus is not generally to buy and hold forever, because things happen in cycles. Sometimes, like in COVID, Zoom was very popular, right? If you all remember, even today, we're still using Zoom, but the premium associated with something like Zoom, has fizzled out. So the opportunity to be in something like that was more time constrained within the framework of what we had to go through in the lockdown period and all that. So a smart investment or opportunity would have been to get in at the right time and then exit, relatively speaking, before the whole thing burst, because whoever's been in Zoom since since the highs understands that it has not been the most exciting place to be. And so that's what active investing allows you to maneuver when you see those opportunities. So in the category of active investing, there are two approaches, value and growth. But let me take a step back. So when you're investing, right, some people ask, okay, what is investing? Why is that different than things that people might consider to be speculating or gambling out there? So we like to use one definition that has been provided by Benjamin Graham. So Benjamin Graham is actually the person that Warren Buffett attributes a lot of his learnings to, his success. He says, look, he learned a lot from him. And in the book called Security Analysis in 1934, there was a book that Benjamin Graham, he put together, and he said in there, an investment is an operation which upon thorough analysis promises safety of principal and a satisfactory return. So if you're investing, you definitely want to be looking at opportunities where you're doing your homework, basically. You don't want to just blindly go into anything without thinking carefully about what is the value of this company, who is the competition, how long have they been in business, what are the revenue growth projections looking like. So that's what there's a thorough analysis aspect. That's the first level. The second level is you're looking for a margin of safety, right? So for example, if I want to buy this suit, right? This is the same suit I had since my wedding time, so I don't know what suits go for these days. But let's say $250, is what it's supposed to be trading or selling for at Macy's or Express or whatever you guys like to shop. But if it's trading for, let's say, if it's being sold for $100 or $150, you know that it's amazing sale, right? At $150, maybe I'll buy 2 suits, right? I need to go to a bunch of presentations around the country, and I need upgraded my suit collection. So maybe I'll buy 2 suits. But what if it's $100? Oh, it's tempting. I might buy 3 suits, right? Because the average price or the market price is generally supposed to be $250. So that's what you want to do. There's a margin of safety. When things get cheaper, you want to buy more shares. Unfortunately, we observe the opposite behavior sometimes, right? And clients, I can tell when things are a little bit rocky, they reach out to us and say, well, what's going on in the market? We should be selling this thing. And I'm like, it just got cheaper. Maybe we should buy more, right? And so that's generally what margin of safety is. You want to try and buy, of course, not something that's overinflated. You want to pick a certain range, right? That's that margin of safety. And then there is a satisfactory return component, right? Satisfactory return means, you're not going to turn $10,000 into $1 million, right? Overnight. That's going to take time. So if anyone's looking to do something like that, then they're probably not thinking of that correctly. They're probably looking to, speculate, go all in on one thing that they thought was the hottest thing in the world. And, that's not really investing. So investing has a systematic approach. And when you're engaging in value investing, for example, which is what is shown here, you're looking again at the suit example, buying things below what we believe is their worth. If milk is half price, you buy 2 gallons. So same thing we apply in our day-to-day living. We should look at that with investing. With value investing, the individual stocks that we are picking generally are lower beta stocks. So beta is a measure of risk. And so in a value portfolio, we want to reduce the risk, because the people who are looking to invest in the value approach are those who want to minimize the volatility. They want more steady returns, for example. On the other hand, growth is a type of strategy that focuses on disruption, looks at where is the high risk, high reward opportunities, looks at themes that we believe where the puck is going. So for example, AI, right? A lot of you, I see, probably working in tech, so you understand how AI is evolving and disrupting a lot of different industries right now. And so, you know, one theme is spaces like AI or blockchain technology. There's a lot of disruption happening there and a lot of exciting, you know, evolution of things happening in that space. So growth is, again, looking at where is the market going in the next 5 to 10 years, and that's what it's focused on. And, you know, of course, because things are more early, you're bound to be among those who are taking on a little bit more risk, because, you know, you don't want to be late in any given theme. You know, if we believe that AI is going to be a multi-year theme, you want to get in early and pick the right opportunities early on. That just means that there might be a lot of bumps along the way, but over the long term, growth is expected to outperform the value strategies as well. So that's kind of the idea, but you have to understand what is it that you're comfortable with as an investor. And based on that, it's like a menu. We have a menu, right? I go to a restaurant with my family and I want to buy biryani, right? Because, you know, we worked hard and we're looking forward to a nice time with the family. Or I see a lot of Arabs today, so maybe you want to buy some makluba, right? Whatever it is that you love. And I can hopefully see people are paying attention again. I think they were asleep for a bit, so I had to check in, make sure everyone's still alert. And, you know, I'm not like the Arab guys who'll be like the bland, they want things that are not spicy. I'm the kind that's going to go in and say, give me the spiciest that you have, because that's my tolerance level, right? So in the same way, you know, we have a menu of different, you know, investment categories. There's some that are spicier than others, right? Some people want the spice, but they cannot handle it. And then they start crying when the market is down. So just trying to use the spice analogy to explain some of these, because we do have different things. And so that's a good thing that we have a wider menu so that it can be suitable for different types of investors. So I'm going to pause there, and inshallah, you know, this is just a visual here to show you, like, if you're in an aggressive camp, right, you're going to take on more risk, but the potential is higher. And so we diversify, as I mentioned earlier. You're not just going to go all in on one stock. You're going to have a components of equity, you know, that represents, and even within the equities, we'll have different you know, sector allocations like technology, healthcare, you know, communication services, you know, maybe even consumer defensive and other things that might make up the equity component. Sukuk, as I mentioned earlier, is the Islamic bond component, and then REITs, you know, are also part of what we would consider. So if you're a very conservative investor, your portfolio is going to have a higher allocation towards Sukuk, for example, versus an aggressive investor. So that's kind of, you know, how this might be looked at. And of course, if I go down the risk curve, then my potential returns are also going to decline over time. So I just want to keep that in mind and turn it, inshallah, to Rezwana to cover the next aspects here. And inshallah, you know, I will be muting myself. And if you guys have any questions that you're asking along the way, I'll try and answer on the chat, but I will let her cover the next segments here. So thank you.
Thank you, Aliredha. I'll just share my screen here. I think you might still be sharing your screen, so it's not.
I stopped sharing, so I think you
Okay,
should
cool.
be able to.
Right. Can you all see my screen now?
I can.
Yes?
Yep, I can see your screen, Rezwana, so I think it's working good.
Wonderful. Yeah, thank you so much all for being here. As Aliredha mentioned, my name is Rezwana. I am one of the investment advisor representatives with Sharia Portfolio for the past 3 years. I am based in California, Fremont, California locally, and I manage all of our clients in California and beyond. So I'm excited to talk to you all about, halal investing, and more specifically, I'm going to be discussing a little bit about the principles of halal investing, what makes an investment Sharia compliant, what to look out for, and all that. So first of all, let's look at a little bit about the definition of halal investing. As you can see, so halal investing refers to investments made in securities which conform to Islamic principles. When these investments adhere to the guidelines of a trustworthy Sharia advisory board, they are considered to be Sharia compliant. So the definition already stipulates two things for investment to be considered Sharia compliant. First of all, an investment has to conform to Islamic principles, and it has to adhere to guidelines set forth by a Sharia advisory board. We're going to discuss the screening criteria shortly. I just wanted to take a brief moment to discuss the Sharia standards. So the Sharia standards essentially provides a framework that allows us to invest in aligned with Islamic finance principles. There is no single universally recognized Sharia standard in the world of halal investing. There have been a variety of standards that have been developed over time. While these standards all generally follow the same investing principles, they can vary in their level of strictness and interpretation. At Sharia Portfolio, we follow the guidelines set forth by IOFI, which stands for Accounting and Auditing Organization for Islamic Financial Institutions. It is a nonprofit organization that was established in Bahrain in 1991 to promote Sharia standards for Islamic financial institutions. Today, IOFI is one of the most widely recognized and authoritative standard-setting body in the world of Islamic finance. IOFI standards are generally very rigorous and often dubbed as the gold standard for halal investing, and they're used by institutions from over 45 countries in the world. As you can see, they have a very diverse Sharia advisory board with prominent scholars. Some of you might recognize these names, such as Mufti Taqi Usmani and Sheikh Abdullah bin Sulaiman Al Mania. These are, as I mentioned, there are various standards that are widely used. You just want to make sure that you do your due diligence and perhaps follow one standard that suits you. Moving on, Sharia advisor. So in addition to IOFI guidelines, we also seek the expertise of our Sharia advisor, Sheikh Umar Khan, to help us develop a more concrete framework for our Sharia screening. Those of you who may not be familiar with Sheikh Umar, he is an Islamic scholar with an Alimia degree from Al Salam Institute, and he has a Mufti title from Darul Uloom UK, which is basically a license to give Islamic legal verdicts. He has a master's degree in both conventional finance and Islamic finance. And among other things, Sheikh Umar helps us at Sharia Portfolio to review our operations and portfolios so that we have better alignment with IOFI guidelines. So now let's talk a little bit about the actual screening criteria that are examined under the IOFI guidelines. The first screening criteria that is there kind of dictates that a Muslim investor may not purchase fixed income securities, preferred shares, or convertible notes. This is primarily because this type of securities fall within the prohibited scope of riba by guaranteeing the principal and offering a predetermined rate of return. So even if the primary business of the company is deemed to be halal, such securities would not be in compliance with Islamic law. However, stocks, sukuks, Sharia-compliant ETFs, mutual funds, REITs, as already mentioned, would be deemed permissible. Now, the next screening criteria is that of business activity. So a Muslim investor may not invest in a company whose primary business is haram or unlawful. And this screen essentially removes companies involved in the criteria that are listed here. So, alcohol, pork, tobacco, but it's not limited to just these. There are others, but I think this overall does a pretty comprehensive job of what kind of business activity to avoid if the primary business of the company is involved in these things. You should probably stay away from them. So the list is there for you to look at, and then lastly, after the business companies that pass the business activity screen, right? So, if you found a company that you are really excited about, and they're not engaging in the asset classes that are impermissible, they're not engaging in the business activities that are impermissible. But then last, you also have to make sure that, according to IFE standards, we have to further scrutinize them with the final screen, which is to look at their financial ratios. So even though the primary business of the company has been deemed to be halal, this section kind of helps weed out elements of haram that may have become incidentally too large a part of their total revenue. So the current IOFE financial screening criteria includes the following 3 ratios. There is interest-bearing debt. So interest-bearing debt over 12-month average market capitalization should be less than 30%. Cash equivalents, and receivables over assets should be less than 30%. And cumulative revenue from non-compliant activities and non-operating interest income should not exceed 5% of their total income. So of course, we did not make the standards ourselves. We use IOFE guidelines, who formulated this based on different hadiths. And we try to ensure as portfolio managers that we continuously monitor our clients' portfolios to track these changes and then ensure that our investments are aligned with Sharia guidelines. Because hopefully what you can see from here is that the Sharia compliant status of an investment can change over time, making it something of a dynamic factor and not a static one. Both business activities and financial ratios have potential to change from time to time based on what kind of business undertakings the company is taking, what is the revenue composition of their business. So if you as an investor are not mindful of these changes, you could potentially be investing in stocks that are no longer Sharia compliant. So it's just something to be mindful of, and we of course make sure to do our due diligence to continuously monitor our clients' portfolios to ensure that we are in Sharia compliance. So that's mostly it for Sharia compliance. So far we have talked about the basic of investment. We talked about different investing philosophies. We talked about the principles, right, of Sharia compliant investing. Now let's take some time to discuss how you can actually get started with investing in the stock market, right? All of the things that we talked about before is of no use to you if you don't know how to get started, right? So in order to get started with investing, you would first need to decide on your investing approach, right? So what kind of an investor you are. We have tried to outline 3 different approaches for you to think about here. So one is the self-management route, one is robo-advisory, and then one is having a financial advisor. So in the next few slides, we're just going to discuss the pros and cons of each approach that can hopefully help you in your decision-making. So self-management, the do-it-yourself option, right? It's a great choice for those who have some knowledge about the markets or who can devote the time to make investing decisions. The positives, right, the pros of this approach is that it's low cost. You may have flexibility and autonomy to select your own securities. You can have access to wide range of investments, and it might be an exciting prospect for some of you, right, to manage your own investment. However, it also puts the onus on you to research the market and invest wisely, which can be time-consuming and stressful. And essentially, you may not have a safety net to back you up or to provide you with a second opinion if you make poor investment decisions. And then also, difficult market conditions can elevate different emotions in us. And with that, there can be certain investing biases that you may not realize, but you probably have. So one example would be the herd mentality, right? Which is you just want to follow what everybody else is doing. Previously everybody was, buying NVIDIA, right? When they, when they were at an all-time high. So whenever when we see this herd mentality a lot, and that leads to buying high and selling low, which is the opposite of what you should be doing in investing, which is targeting, when stocks are trading at a low price and then selling them at a high price. There can also be selective memory, right? Which is you tend to remember positive outcomes over negative outcomes, right? You can be anchoring, right? Which is you get very stuck at a specific point of reference when you're thinking about your investment performances, right? So these kind of biases, when you have them as an investor, can be highly detrimental to long-term performances and can throw you off your financial goals, right? Can throw you off track. Professional investment managers, they know, understand, and kind of actively work to remove these situations. And that can create this kind of biases. So if you're managing your own portfolio, you just want to have some sort of emotional discipline to help you navigate this kind of biases. Another thing to remember is the dynamic status of Sharia compliance that we mentioned before. And if you're self-managing, you will want to take measures to monitor your portfolio continuously and ensure Sharia compliance. Now, moving on to robo-advisor. So the robo-advisors are essentially they're low-cost digital investment platforms that will automate your portfolio management by using computer algorithms. The positives of robo-advisory model is that, yes, it's significantly low cost. It's very easy to open accounts online to get started, and they usually have or require a lower account minimum. But some of the drawbacks could be that there is limited personalization, flexibility, and no human interaction available. And if you are someone who needs human interactions and wants relationship with your financial advisor, then robo-advisory will most likely not cut it for you. Because let's be honest, your robo-advisor probably won't comfort you after a significant market drop. They won't be available to alleviate your fears and explain how markets work. And they certainly cannot provide you with a holistic view of your financial life. So just some things to keep in mind as you are going about making your decisions. And then the last slide, we want to talk about the pros and cons of having a financial advisor. So an investment manager or a financial advisor is a great do-it-for-me option for those who want to spend just a few minutes a year worrying about their investing, right? It's also a good choice for those with limited knowledge of investing. However, please note that financial advisors will usually have higher management fee for doing this work for you, and they will require slightly higher account opening minimums, right? The way I see it, the biggest benefit of having an advisor is that they will work with you and your family to understand your needs, your fears, and goals. If you encounter a major life event, where you inherited money, you bought a house, you got a divorce, you need to plan accordingly, plan carefully, adjust your situation, and take actions to ensure a positive outcome. And many discussions are probably required during this process, And having somebody like a human professional that can help you adjust and adapt as needed can make a lot of difference, in your success. Also, as you age and your asset grows, the complexity of your financial life will grow as well. Being able to pick up the phone and send an email to plan ahead or set plans in motion might be, just worth the price of having access to a strong financial advisor who will ensure worry-free investing. So to summarize, all of the above mentioned approaches are great options for anybody who is looking to get started with investing. Which option you will choose will largely depend on your investing goals, your knowledge, your experience, and personal preference, most of all. You will definitely want to make sure that you do your due diligence to ensure that you are comfortable with the choice that you're making, and inshallah, get any help that you need on the way. This, I guess, concludes my presentation. We're going to open it up to Q&A. Aliredha, did you want to mention anything?
Thank you, Rezwana. I think one of the items I tried to address that was brought up was regarding the criteria for some of the percentages. I mentioned it briefly that it's through generally the ijtihad. The scholars will get together and deliberate based on their understanding of the Quran and Hadith. But I can give you a couple of nuggets based on what we have come across, that the scholars generally will refer to some of the Hadith. For example, one of the Sahaba, he wanted to donate most of his wealth, and I believe the Sahaba's name was Sa'd bin Abi Waqqas. So when he wanted to donate, he said, look, can I give up half of my wealth, two-thirds, and until he said a third, that's when the Prophet said that's okay. So based on that, AOFI guidelines, for example, will look at how much debt is permissible, and you've noticed the 30% mentioned there. So I believe that is one of the items for that. And for the other one, for the 5% non-permissible income, this is because if you look at a financial statement, any income that is outside of the primary income, for that to get labeled on, it has to be at least 5% of the revenue. So that's how you're going to identify that on the financial statement. And in addition, the question came about, again, the hadith surrounding that was when a mouse, and this I heard from Sheikh Joe Bradford directly. So if any of you know Sheikh Joe Bradford, he's an Islamic scholar, especially in the subjects of Sharia and finance. He's well versed. So when he was presenting on this, I got it from him, where he said there was a mouse that dropped in a tub of ghee. I don't know, if you guys are familiar with that clarified butter that is used in a lot of different cooking and breads and things like that. So the Prophet ﷺ was asked that, look, there's a mouse that dropped in here. Can we still use this, or do we have to discard the whole bucket of ghee? And in the past, during the nighttime when it was cooler, it would generally kind of freeze, right? So the top layer is what the Prophet said, look, the layer around where the mouse was, you can take it out, discard that, but the rest of it is okay to use. So the same way, it's kind of seen as though you're purifying your income. You're not necessarily accepting of that impure income, but you can still invest in some of these as long as the idea is to purify that. So hopefully that provides that clarification for that question. It's not, didn't want to say all those words in the chat, but I figured it's easier to explain by speaking about it. But yeah, I think that the most exciting thing I will say is, look, our work here is not to act as salespeople. We're here generally to be your partners in your investment journey, because investing is not a race. This is not. This is more of a journey that you're going to be on. You're going to have kids, you're going to be getting married. If you're not, you're going to have to worry about, education savings. You're going to have to think about, if there's people who are divorced, there are different challenges that come along with that. And Muslims are not immune to those types of challenges. If you are retiring, do you have a legacy set forth? How is your wealth transition plan coming along? So this is where we're going to be able to work with you at every step of the way. We have clients who are young, we have clients who are post-retirement, and we have clients who are in different investment strategies. So this is where we can truly help you navigate these different aspects of life and be there as a resource every step of the way. So this is unlike the mortgage business where you want to buy a house, you go, you work with a real estate professional, they find you the house for your family, and after the home closing, that's it, the transaction is closed and it's done, right? With us, our job is not just let's open an account, right? That's very easy to open an account, but we're here to be there for you, right? When you need to reach Rezwana, she is there to schedule an appointment with you on a based on your schedule, and you can reach her by giving her a phone call, and you don't have to call a 1-800 number, right? So that's the advantage of having someone by your side who can inshallah help you. And that's what I wanted to make sure that we try and be there every step of the way. Otherwise, if we didn't enjoy this, I'm sure on a Sunday like today, you'd probably not be seeing us, right? It's just because we do care, we enjoy this type of work, we want to be here for our clients, and inshallah help you in terms of every step of the way. So I see a question here, that is asking about the SPUS because it's a little bit more tech heavy. I understand that it's a little bit more tech heavy because of the fact that we are stripping out the financial services, utilities, and those other aspects that are not compliant within. Because if you have 500 stocks in the S&P 500 and you take out the non-halal, you're roughly left with about 200 stocks. And so the allocation weights are going to be based on the weights of those companies that are compliant in relation to the overall index. And so that's why tech tends to become a little bit higher. And that's not necessarily a bad thing, because in reality, over the duration of time, technologies actually brings the cost of goods down, the cost of services down. It's a deflationary force, making things more affordable. So it's a good idea, but I understand, the idea for trying to manage that. I would say that, look, one way to try and balance some of that is, how much of the ETF are you investing in and how much of it is in other aspects. So in our actively managed portfolios, we're able to monitor and see, okay, how much is our overall sector allocation, including what the ETFs might be representing in a portfolio. So that's one way to do it, through the individual stock pick. But otherwise, ETFs, outside of SPUS or or SPTE, there is developing world fund, like SPWO is a developing world fund. So you may consider something like that if you're looking for emerging markets type exposure. But of course, for each person, it's going to differ, right, based on their goals. And as the industry is evolving and more options are available, we will definitely keep you guys posted. But I would always recommend checking out the SP Funds website if you're looking for more product-related information. The SP Funds website is a good resource for that. So hopefully that helps answer the question on that. Any other questions that you guys have, feel free to post them here. I know we're at the hour mark, so we might have opportunity to answer maybe one or two more questions if there are any. But I do also want to point out that if you want to schedule an appointment with us, we are able to connect with you, and not just meet to discuss more about Sharia portfolio, but to truly understand, right? You may not have ability to ask in a forum like this, but on a one-on-one, you can maybe discuss, okay, how can I navigate my 401k? I know we did not get that question here, but that's a common question. Look, I have a 401k through my employer or a 403b plan. How do I make sure that my retirement funds are invested in a halal way? So in a sense like this, you want to find out, is there a self-directed, or it's sometimes referred to as a brokerage option within my 401k? So that way you are not restricted to the menu that has been provided for you by your employer, whether it's through Fidelity or Vanguard or whatever the platform is. You generally have a menu that you can select from. But if the company does offer a self-directed or brokerage option, then you're now eligible to now pick halal choices, and we can help to potentially manage that on your behalf through something called a limited power of attorney, or a limited trading authorization form. So we've helped a lot of clients this way. Something that you want to be mindful of. If anyone does have an old 401k, definitely there's an opportunity for you to consider rolling over to an IRA. Even if you choose to manage it on your own, it's something that's worth knowing, because in an IRA, you're now able to at least move away from the non-halal funds and pick at least some of the halal choices out there. So something that you definitely want to be mindful of with retirement plans, because that's where majority of the people save, and you don't want to just be stuck in there. We do invest in our actively managed portfolios. We do consider precious metals. We do consider real estate, and within the equity portfolios, we are also in some of the growth strategies looking to participate in some of the crypto or Bitcoin related opportunities that we're seeing. So again, it's not for everyone, but these are the different aspects that we're able to participate in as well. And for those who are accredited investors, there's other opportunities as well, that we can discuss. So, but in our actively managed, in our equity type portfolios, we do balance between stocks, real estate, sukuk, based on the pie charts. If you remember the pie chart that we were showing, that kind of gives you an idea of what a typical portfolio may have different elements. So it's not just all in one, basically. So good question there. But yeah, I mean, we're really very grateful for all of you who chose to join us here. We would love to be able to work with you. I will tell you one thing, seasonally speaking, I did a short 15, 20 or 20 minute type video in August. Seasonally speaking, August, September are weak months. So if you remember what I was mentioning about buying when the price is low, when things are generally not, taken off, I think this is not a bad time to consider building a portfolio. I think Q4 is going to be very good. Again, if there is no black swan type event, if we avoid anything like that, I think Q4 is going to be good. So for those who are like considering when to start building, now is not necessarily a bad time, because the weakness that we've encountered in September and August is actually creating some of the opportunities we're seeing in the equity side, as well as in some of the other asset classes as well. So I would, in line with trying to shop, when there is a discount, right? Everyone wants to buy when things are on sale. So I'm telling you right now, there is some decent opportunities, because I'm one of the portfolio managers. So I kind of have a sense of what's going on out there. I look at the fear and greed, and there's still a little bit more fear, and people are still kind of nervous a little bit. Elections are coming up. There's all these things to worry about. In reality, when there is worry, as you heard me say, run into the burning building. There's still a good amount of fear out there. It's an exciting time for me. I'm personally taking advantage of that for many of my clients. So really excited to be able to work with with you guys, and Rezwana is going to be a fantastic resource to work with. She's very knowledgeable and can help you navigate any different aspects that you may have going on for yourself. The fees are going to depend on the type of service, but generally speaking, since that question has been brought up in the channel here, I will address that briefly, and hopefully we are at that end here for our journey for today. And if there's any follow-up questions, Rezwana's contact. Rezwana, if you don't mind, put your contact slide, and there's a link also to book the appointment directly with her. There's a QR code. You can scan that directly, so it's right here. You can email her, you can give her a call. Feel free to screenshot this or go ahead and scan. And the best way is just book an appointment, find a time. Her schedule is updated, and she can meet with you. I would love to meet with anyone as well if you truly do want to meet with me, but I'm going to be traveling out of country, so my schedule is a little bit hectic for the next few weeks. But I highly urge you guys to meet with Rezwana. She's going to be able to take good care of you guys. But in terms of the fees, the management fees are dependent on the total assets that we're managing. Under $500,000 is generally 1.5% per year for our actively managed portfolios, which I imagine a lot of you are interested in something like that. For any portfolios between $500,000 and $1 million, we would charge 1.2%. And any portfolios north of $1 million is 1%. Our average client size, just for your reference, is about 250,000. So we're not, you know, we're well versed with working with clients, you know, who are both high net worth as well as investors who might be getting started. So just for your reference, wanted to point that out. But I do hope that was all that we had for today. Any last minute items? You have our contact, do reach out to us. And if there's any future topics, do let us know. Let Rezwana know. If you guys have any specific questions or areas you wish for us to go over for you in the future, we're at your service. Let us know if there is something in particular that we can do for you, or a particular topic. If you're interested in it, probably someone else is. Maybe we'll do it for all of our clients as well. All of our people who are subscribed to our newsletter, which is another thing I would encourage. If you're not subscribed to our newsletter, please do, because we do share content and information that hopefully can benefit you all. And rate of return also, I did not talk about that, but a rate of return, because that question just came in, is based on also how much you're investing. So, sorry, not how much you're investing, what strategy you're following. If you're following a conservative portfolio, generally I would say 3 to 5% is what we are aiming for, because those who are in the conservative camp, they're not concerned about making a high return. Their focus is capital preservation, stability. On the other hand, if you are a more moderate investor, you're able to take some level of risk, but also looking for some level of kind of balance in the portfolio, then I would say 6 to 8% is a realistic goal for something like that. And if you're in an aggressive camp, then I would say 8 to 10% is realistic for someone in that camp. But again, in the aggressive, you can be either value oriented or growth. So the growth investors, we're generally aiming for a little bit higher return. So I would say 12% or higher is what I would aim for if you're in the high growth. But again, remember my spicy analogy earlier, right? You have to be willing to handle the spice if you're going to go for something like that. So inshallah, yeah, we do have investments to generate cash flow. But I also urge everyone, whoever participates in investing, keep a long-term view, right? There's going to be ups and downs. So don't try and think of this as, in 3 months, if I put it, can I pull out? No, if you're less than a year, I generally will caution against investing just because of the volatility. Even the conservative portfolios could get affected in a short-term time frame. So keep that in mind, just because, we are also subject to the factors that can affect, portfolios out there. We also are subject to some of the risk factors out there. But of course, if you have a good time frame to work with, you can inshallah do well. And many of our clients, alhamdulillah, have been able to maintain or be on track to what are the goals that we had set for them. So hopefully that helps that. Thank you all once again. I'm going to respect everyone's time. Recording, inshallah, if we need to send that out, we can do that. If there's anything future that we can help you with, please do not hesitate. We're here at your service. Any last minute comments from you, Rezwana?
No, I just wanted to echo what you had said. Happy to work with anyone. I am based locally, so if anybody's here in California and would like to meet in person, we're able to do that. And Aliredha is our portfolio manager, and he manages our portfolio. So if anybody is willing to, has questions for him, please feel free to reach out as well. And yeah, my information is here listed for you if you would like to schedule a call. We'll be happy to work with you, inshallah. Thank you.
Fantastic. So thank you all once again. Hope you have a good rest of the weekend, and we look forward to collaborating with you here now and in the future as well. Assalamu alaikum wa rahmatullahi wa barakatuh.